Hi, today we are going to find out what are the differences between investing and trading. My name is Manu Matthew. Welcome to my channel. I hope you enjoyed this video. So let's dive into it. So what is investing and trading? It's very important to understand what are the differences between investing and trading. So what is investing? Investing is the practice of buying and holding shares for a longer period of time. Essentially, this could mean 5 years, 10 years, or even longer. Potential investments could involve stocks, bonds, funds, shares, etc. Long-term investments reduce the risk by not having to worry about the temporary volatilities in the market. There can be market ups and downs based on temporary news in the market, or there is a financial earnings that's released which was not meeting the expectation. All those things could factor into having ups and downs in the market. As an investor, you do not need to worry about these temporary ups and downs. An investor always goes into a stock or share or an ETF. They would purchase it and hold it for a really long period of time. Like I said, it could be starting from 5 years time, or it could go all the way up to 30 years, 40 years. The advantage of long-term investing is that if you purchase the share of a solid company, over the period of time there will be many ups and downs in the market, but then at the end of the day the market will always go up, which is the advantage you have. So you can be a passive investor, you can invest your money in it and then completely forget about it. That's an investor. So what is trading? Trading is the practice of buying and selling a share in a very short period of time. It could be minutes or hours or even a day. Sometimes it could last a week as well, but it's always a short period of time. You take advantage as a trader of any market news that's temporarily announced or an earnings calendar that's coming up. So you're expecting to get a profit after the earnings date, so you would buy a share before the earnings, and then once the earning has released and you have the expected results and the share goes up, you sell the share. So usually it takes place within a day or a few hours time. A trader always takes advantage of the market volatility that an investor avoids. Trading involves a higher risk because you're buying and selling in a short period of time and trying to take advantage of a temporary news and hoping to make a profit on it. So what are the difference between investing and trading? An investor holds the share for a long period of time, hoping to make a profit in long period. Doing so, the investor also reduces their risk drastically because they do avoid the market's ups and downs. Whereas a trader invests money for the short term and hoping to make a profit with that. Trader always takes advantage of market news, temporary volatility, etc. to make a quick buck. Unfortunately, according to statistics, many of the traders do lose money on this sort of investments because market is so unpredictable and everyone tries to take their best guess, and it does work out sometimes, but most of the time it does not. So the main difference between investing and trading is the amount of time that you hold a stock, an ETF or fund, etc. If you hold your investment for a longer period of time, that's investing. Whereas if you are buying and selling a share within a short period of time for a quick profit, that's trading. Another difference between an investor and a trader is the amount of news that you need to stay up to date. As an investor, once you have invested in a solid stock, you do not need to stay current with all the latest in the market news. Whereas a trader, you do always need to stay current with the latest in the market. That's the way a trader makes their income. Traders need to jump in on a quick tip or a quick news that has been released, make a buy or a sell and make their profit within that short window. Another difference to consider when you're thinking about being an investor or a trader is the length of time that you need to lock away your funds. As an investor, you need to lock away your funds for a few years, so you could only afford to lock away those funds that you have saved up and you do not need access to really quick. Whereas a trader can invest and get a return on it, either profit or loss, within a short window of time. As a trader, you do not need to lock away your funds. You can get access to it within a very short period of time. An investor relies on long-term growth, which in turn reduces the risk that's involved with it. So if you invest for the long term, the chances of a good stock going up are always very high. Whereas a trader, when they are reacting to an immediate news in the market, you cannot always predict accurately what is going to happen. As a trader, you're taking your best guess and hoping that will give you a return. That's the reason most traders do lose money. I hope this video has helped you to make an informed decision on if you want to be an investor or a trader. Differentiating between them is a very crucial part of becoming an investor or a trader. I hope you have enjoyed this video. If you like the video, please make sure to like and subscribe. And I hope to see you on another video.